Hello everyone, welcome back to my channel. Recently, banks like Laxmi Vilas Bank, Yes Bank, PMC Bank had been put under moratorium by the Reserve Bank of India due to their bad financial condition. Depositors had to face a lot of inconvenience. So I decided to make a video on how to choose a good bank for opening a bank account. Firstly, one needs to know that their savings and deposits up to rupees 5 lakh in any commercial or cooperative bank is insured by Deposit Insurance and Credit Guarantee Corporation, that is DICGC. To be 100% sure, it is better to confirm with the staff of the bank whether they are covered by DICGC or not. However, the major risk lies when the amount of deposits in a bank is more than 5 lakh. There is a significant chance of losing your money if the bank you choose is not financially healthy. So, how to use the DICGC insurance effectively to safeguard your money? Say for example, I have a savings bank account and a fixed deposit with ABC Bank. Each of these accounts has rupees 5 lakh. Now say ABC Bank goes out of business and it is not able to repay the 5 lakh I have in my savings bank account and the 5 lakh in the fixed deposit. Now, even though these two are separate accounts, both of them are in my name. So DICGC won't insure them separately. Even though I am losing 10 lakh rupees combined, DICGC will only pay me rupees 5 lakh. So in this case, I'll be losing rupees 5 lakh, that is 10 lakh minus 5 lakh, because the DICGC insurance is just 5 lakh rupees per person and per bank. Now let's add another bank XYZ into the picture. In this bank too, I have rupees 5 lakh in savings bank account and 5 lakh in fixed deposit account. Now say for example XYZ Bank and ABC Bank both go out of business together. DICGC will pay me rupees 5 lakh each for the money I'll be losing in both of these banks. So out of the 10 lakh I have in ABC Bank, I'll be getting 5 lakh, and out of the 10 lakh I have in XYZ Bank, I'll be getting 5 lakh rupees. This is because DICGC insurance is separate for bank accounts held in different banks. I hope you all understand how DICGC insurance works. What you can do is have bank accounts in 2 to 3 different banks so that each one of these accounts gets a separate DICGC insurance of rupees 5 lakh. However, beyond 2 to 3 accounts, you cannot keep on opening them because it will become very difficult to manage. So, what else should one look for in a bank? One can check the capital adequacy ratio. The capital adequacy ratio is the ratio of bank's capital to its risk-weighted credit exposure. Sounds complicated, right? I'll make a detailed video on it in the future. For now, you can understand it as the amount of money the bank can afford to suffer as losses before it becomes insolvent, that is, goes out of business. In India, the minimum required capital adequacy ratio is 9%. Higher the capital adequacy ratio, better it is. So always choose a bank that has a good capital adequacy ratio, which is higher as compared to other banks, so that your money is safe. Another ratio to look out for is the NPA ratio. It indicates how much of the bank's loans are in risk of not being repaid. If the NPAs increase way too much, then the bank can end up in trouble. So it is always better to open a bank account in a bank that has a good history of low NPAs. There are many banks in India that have consistently kept their net NPA below 1%, below 2%. So go for such banks. The banking industry has several other key ratios, which I'll be discussing in future videos. However, from the perspective of a depositor, these two ratios are the most important in my opinion. Apart from this, you can check the share price performance of your bank. Has it fallen significantly in recent times? Try to find out the reason and how it may affect your deposits. You should also check the profit trends of the bank and compare it with its peers. Also try to know about the management of the bank. Are they ethical? Were they involved in frauds in the past? You should also check out news about your bank at least on a weekly basis. If not possible, then at least fortnightly. You should know if your bank is in the news for the wrong reasons. All this sounds like a lot of work. It is quite tedious. However, we all put in a lot of efforts to earn money. So can't we put in slightly more efforts so that it is with a safe bank? A lot of people put in their life savings into fixed deposits. They should make sure that it is with a good bank so that they don't end up in financial trouble after retirement. In the present digital world, our liquidity for daily needs completely depends on savings bank accounts. If the bank goes under moratorium, then the inconvenience later is too much. So it is better to be alert and make sure your money is safe. I recently shifted, so I'm still adjusting to the new setup. The audio and video quality might be a little different, so please bear with me. If you liked this video, please give it a thumbs up and subscribe to my channel for my upcoming videos. Also, do share it with your friends and family who might be interested in finance. Stay tuned. Thank you.